Morning, friends. Today I've got an update for you all for a company called Gravita India Ltd. It is a monopoly recycling stock with over 500,000 or 5 lakh metric tons per annum capex plan for FY27. This is a stock that you should keep on your radar or keep a track of. India's recycling industry is undergoing a transformative shift with significant growth expected across multiple segments. This expansion is fueled by technological innovations, government initiatives, and active involvement of the informal sector. So, the shares of the leading recycling company involved in lead and aluminum processing, trading lead products and aluminum scrap, and executing trunky lead recycling projects are set to target 5 lakh uh, plus metric tons per annum. One to look out for. So, the capacity to recycle at least 5 lakh metric tons per annum. So, it is going to expand its machinery and the system to be able to handle that kind of capacity, and this is going to be done by the year FY27, which is going to be starting sometime in April next year and most likely to complete before the March quarter end of 2027. The shares of the Gravita India with a total market cap of 13,300 crores on Monday were trading at 1804 rupees per share, which was 0.5% higher than its previous close. Has a return of 106% in the last year and still a return of 415% in the past 3 years. Impressive 4,467 for 60% return in the last 5 years. So, company has a guidance robust capex plan. It has estimated a capex of 3.53 lakh metric tons for FY25. So, 4.39 lakhs metric tons per annum for FY26 and 5.05 for FY27. 600 plus crore by 2027, and as of December 2024 it has 98 crores, so it is going to add another 500 odd crores by 2027 FY 2027, so that it could attain its recycling estimate of 5 lakh tons per annum vision by 2028. The company highlighted expanding its business with new recycling verticals, including lithium, steel, rubber, and paper. The company aims to achieve over 25% volume CAGR with 35 plus percent profitability growth and 25 plus percent return on investment capital. The company is envisioned to attain over 50% growth in value-added products and 30% growth in non-lead business while reducing energy consumption by 10%. Geographic location: facilities spread across various states in India and has international facilities in Sri Lanka and Africa. It has upcoming facilities in countries like America, Europe, and Oman. It has a strong procurement network with 1,700 touch points and more than 2.5 lakh metric ton scrap collection spread across countries like America, Europe, Africa, Asia, and Australia. The company serves more than 200 domestic customers in 20 states, 50 overseas customers in 30 countries. Strong partnerships. The company has strong partnering relations with major players like Amaraja Energy and Mobility Limited, Samadhana Motherson International Limited, Polycab Limited, TVS Group, K Industries, Tata Group, Hitachi Energy India, Panasonic Group. Uh, Key developments: Africa subsidiary has commenced commercial production of recycled aluminum alloys with a capacity of 4,000 metric tons per annum, aiming to expand this to 8,000. The company successfully raised 1,000 crore through QIP for growth initiatives, including capacity expansion and venturing into new verticals. So this overseas aluminum alloy plant is in Ghana. The company has reported an increase of 31% year-on-year revenue uh, to 996, increase from 758 to 996. Then key ratios, we'll go through them one by one. Recycling specialist. So PE of stock PE of 45.8, book value 126, price 14 times its book value, current price 1778, ROE 33%, ROC 27.9, sales growth 21%, profit growth 22%, promoter shareholding 60%, public 20%, FIIs 14, DIIs 5, and others 1.35. Return on assets 17%, quick ratio of 0.56, current ratio of 2.1, TTMS earnings per share last 12 months 22.7, inventory turnover ratio 4.54, good. Interest coverage ratio 7.53, which is very good. Long-term debt 0.58, total debt to equity 0.6, asset turnover ratio 3.95 again, which is good. Uh, Market cap 13,130 crores, cash of 2.11 crores, debt of 265 crores, dividend payout ratio 0.54%. So these are the meanings of the various financial ratios that we just went through. So you can go through the understanding the meaning. It's a part of the write-up here for you. So we'll look at some information here. So this is the last traded price yesterday on the market, 1,780. Last 5 days, the company is up with 5%. Last 1 month is 5%. Last 5 days also around 5%. Little bit over than the last 5 days. Past 6 months, the company is still down 30% from its all-time high. And then you can see 92% return in the last 1 year. So with the way the company is growing, it is going to definitely outperform with good growth in revenue this year as well. Something that you should consult an financial broker and see if it is worth investing in this stock from a long-term point of view. Then revenue growth of 31.5% year on year, net income up by 30%, diluted MPS also up by 30%. This is for the year. You can see quarter on quarter earnings per share beaten by 6%, beaten by 4%. Estimate uh, estimate bettered by 13%, estimated again beaten by 2.25%. So the expectation, the company is surpassing the expectation. That is why it has been able to generate a value addition of 92% in the last 1 year despite the stock price correction. Had there been no correction in the market, the stock would have done or would have rallied beyond 150% in the whole year. So Rio appointed as CEO, Yogesh Malhotra, consolidated net profit that you can go through the financials. So important information, January 3rd, Gravita India step down arm begins commercial products at Ghana recycling unit. Then performance, the best performing top stock valuation seems to be overvalued compared to the market average. Growth has been moderate for the few years. Average growth, profitability high. Entry point, the stock is underpriced and is not in the overbought zone. So again here recommendation from the analyst in the market, from various different analysts, would be a buy rating which is showing good. There are no red flags. So here you can see Analyst rating 7 analysts have suggested that we buy this stock, and this information is available on ticker tab for more information if you wish to go through. However, there is a paid subscription that you will have to go through. The company is demonstrated robust operational growth in Q3 FY25, achieving a 33% in volume increase despite challenges in the global metal sector. The company is strategically diversifying its revenue streams, targeting over 30% from non-lead businesses while expanding into lithium, ion, and rubber recycling. Although facing pressures from rising domestic scrap costs and fluctuating aluminum prices, management anticipates a compound annual growth rate of 35% in profitability over the next few years. So this is the growth driver for you all guys, just to keep a track of, supported by enhanced capacity utilization and strategic partnerships. So again, the growth in the recycling capex that is projected for the next 2 years of at least about 50% would lead indirectly to the growth of the profitability of the company. The proactive approach to mergers and acquisitions, alongside a focus on sustainability and regulatory compliance, positions Gravita favorably for future growth despite potential market volatility. So recorded significant financial achievements. So there are seven growth drivers, though we can't see all of them. Operational growth and capacity expansion. That is what the company is relying on. Challenges: declining EBITDA margins, fluctuation in aluminum margins. So again, this is something, some part of it we've already been through, so you can go through if you wish to do so. Face value of the share is 2 rupees. Book value is, this is showing 209, while the other site was showing a different figure. So a price high of 2666 on 17th of September, a high volume of turnover of 1.611 during July. PE chart 105 as of September 17th. Price to book value of 12.7 on September 17th again. These are the companies, the peer companies. Hindustan Zinc again is a very good company. Vedanta at the top of the various different businesses that the company runs. Hindalco again, one of the good performing companies. Hindustan Copper again, one of the good companies to have in your portfolio. However, look at the financials of the previous quarters and the previous year to make any decision. Then you have the smaller companies with a lower market cap. Again, these are companies, they may be available at a cheap price. However, we'll have to look at the financials, that is from a long term perspective. Price wise, you can see more or less in range of 200 to 600, which is again in range of the top companies like Hindustan Zinc, Vedanta, Hindalco, Hindustan Copper. It's important here that we see how much is the return on capital. You can see price to earnings of some of the uh, uh, not so well known companies are high, which could be possibility of price not in range of the earnings that the company has. So that is the reason why it is high. Yes, Vedanta, Hindustan Zinc, Hindalco, Hindustan Copper, they are all well-to-do performing companies with a good track record. You can see, apart from Hindalco, which is giving only 8% on the capital employed, the other smaller companies range from about 16 to 30. So again, something that is a positive that you all can look at. Book value here, it is showing as 69 rupees only. So this is something that we'll need to cross verify whether what is the exact correct book value. Then uh, Return on capital shows 36%. Company has delivered good profit growth, 56% in the last 5 years. Good return on equity, 38.5% in the last 3 years. Healthy dividend payout of 34%. Yeah, stock is trading at 25.8 times its book value. So I'm not really sure whether this amount is correct. We'll have to cross verify. Different sites show different amounts. So something we'll have to look at. Promoter holding has decreased by 4% in the last quarter. Tax rate is low. Again, good profit growth. We've been through that. Revenue growth, as you know, this may be an older updated information, maybe updated in FY24. This is not the most current update, so that is the reason why there may be variation between the sites. This is from Phenology and this is from Screener. Again, additional information: cash efficient conversion cycle of 60 days, high promoter holding, strong degree of operating profit. Then Hindustan Zinc, Dioxides. So you have the same companies available for review on this website as well. Return on capital, again you can see fluctuation between companies. Hindustan Zinc is giving the best return on capital employed. So something for you all to look into and deep dive into. The market cap also is the highest in the industry, 1,87,000 crores. You can see sales revenue has increased, though it may not have increased uh, too much. So maybe the market expectation would have been a higher revenue growth, higher profiting margin, and higher net profit. So the net profit has reduced. September 2024 was an exceptional quarter where the net profit was 51 crores. So again, uh, consistency is what is going to drive this stock further, and that is expected to come in the next 1 to 2 years. Overall, year on year, you can see improvement in the revenue growth. Maybe the last 12 months haven't better, and that is what is going to drive the growth further. Earnings per share should be on the rising trend for the stock to start rallying up again. 16% sales growth last 1 year, profit growth minus 9%. That is a bit of a concern, but I think the company would be able to easily overcome that obstacle. Uh, Reserves increasing gradually, which is a good sign. Borrowings have reduced in the last 2 years, which is again a good positive sign. Debtor days have increased, inventory days have increased, days payable have increased. So some concerns here with the working capital days as well. With the growing business, some checks on the financial obligations and the payments from its customers need to be looked into. Inventory has also grown. It's taking longer for the company to pay its suppliers. It's taking 30 days now instead of 17 days. 60%, 59% promoter holding, FI is 14, DI is 5, public 20, others 1.35. So thank you friends for watching. I think that is all the information that I have. Okay, Ashish Kulecha had a 2% stake in the company, no longer holding any shares. He's sold off his value. Then promoters, 66% was about a year ago, so 7% reduction in the last 1 year, 15 months. Then you have some uh, institutional investors invested, direct institutional investors, foreign investors in the company. Then next reporting date is 15th of May, Q4 2024-25. I think we've been through all that. Refining manufacture of lead oxide from also trades lead scrap or concentrate, batteries scrap, and allied lead products globally. It operates through following segments: lead, aluminium, Trunky Solutions, and others. Company was founded by Rajat Agarwal and Rajiv Swarna on 4th of August 1992, headquartered in Jaipur, India. You can see neutral rating, technical point of view, analyst rating a strong buy again. So this again is from one of the websites called Trading View. For more information, you can connect the dots there. That is it, friends. Thank you for watching. Please share this with your friends, family, and associates so they could benefit from this information. A long-term project that the company is working on expanding its capacity by 50% in the next 2 years. So that is going to drive about a 35% growth in the operating profit margin for the company. So that is something that you need to keep in mind. Consult a financial stockbroker for further details and a decision whether to stay put or to invest in the stocks. So thank you for watching once again.